there's a lot of regulatory growth in the financial services industry, which means there's a lot of additional cost for financial services companies, especially banks and insurance companies, which reduces their efficiency ratio, which reduces their stock price, likely reduces their stock price, and makes it more difficult for them to create capital to expand and grow on.
Right.
How can AI help them? I mean, there's lots of flavors there, right? It can help them with productivity, it can help them with customers. What do you see as the initial use cases? How do they implement them? And how do they govern them?
Yeah, that's a great question. I think the basic thing when you're talking about banks, for example, right? Banking is a simple and a complex industry, but the biggest driver in banking is risk and compliance. And then the actual work of the bank follows that, right? So I think in banking, becomes the primary use case, is when you have a regulatory finding, right? Whether it's an MRA or it's all the way to a consent order, how do you actually analyze all of the things that are going on in your organization, all of your customer interactions, to come up with where is the root cause of these issues, right? So whether they're Reg E complaints or whether they're something to do with, ATM fees in a certain region not being credited back to your account because of some FTP that missed that week, something like that.
Right.
So there's a variety of different root causes, whether it's you don't have the actual controls in place, something broke temporarily, or there's a fundamental mismatch between how the regs are written and how your operations are run. Right. So where we see AI making a big impact in that space is being able to take the regs and actually turn them into something that the AI understands. You've seen that that Gen AI has passed the bar.
Yeah.
Seen that they passed the MCAT. What if you could have Gen AI actually be able to do a regulatory exam?
Okay. Yeah.
So if you were to feed it the data and you did a test regulatory exam, it would actually come up with where are the issues that your organization is likely to run into when the regulator actually comes in and does an exam.
Okay.
So
it's almost a pre-exam.
It's
right?
a pre-exam. It's
a
what you would
pre-test.
normally do a test
Right.
with sampling of your interactions with your customers or different steps in your processes. You can now do that with the whole thing, because now you're talking about AI doing that work versus individual internal auditors in the third line sort of coming in and doing those assessments.
Yeah. I mean, my background, it's actually in testing, right? So that's a continuous testing. So that actually gets me to an idea where I've had of, so when you look at the whole financial system, and there are certain banks that are, too big to fail.
Yeah.
All that sort of stuff. So they're under additional scrutiny.
They are.
And they're asked to annually do a stress test. Now, I know those banks don't actually just do it once a year.
Right.
But they don't necessarily get down to doing it every day. Is this something that could actually become a reality where you're settling all of your systems, you've got all of your market data, and you're putting all that together, so you're actually running all those stress test scenarios daily.
Yeah.
And your bank leadership team's looking at that saying, okay, I can see in 3 weeks' time, we might have some leading indicators that if the market even shifts a little bit, we've got a liquidity problem or we've got a default problem with commercial loans. What does that look like?
Yeah.
There's lots of opportunities out there to leverage that and really create trust for your shareholders instead of paying attention to the regulation.
Absolutely.
How does that come to be though? How do you get when banks trip? So my impression is that banks look at this as a cost, not an investment. And if we could get them to see this, they'd say, well, I'm going to invest in that so that I can better manage my bank.
Yeah, and it's the game is changing, right? So to put it in Warren Buffett's terms, it's a nuclear bomb.
He did say that.
He did say that, right?
It can be.
So the idea is we've had AI in banking for a long time, right? There's very strong model risk management, and AI is used in a variety of areas between credit decisioning or predicting the risk, looking at liquidity, all those areas, AI and analytics are used. The place where I think things are different with generative AI is that you're now able to do things and look at data sets that you were not able to look at before. So let's say that you're testing your operational processes, right? And when you test your operational processes once a month and you're sampling 1% of the phone calls that came into the contact center, and if they were complaints, did they get logged correctly into your complaints taxonomy so that you know that you're not in violation of Reg E, right? From a complaints handling standpoint. That's the way it used to work. Imagine now that every day, every minute, every phone call that's coming in, every social media post, every time somebody walks into the branch and has an interaction, every email that's coming in, what happens if you can actually look at all of that? And it doesn't have to be in real time. You can look at it once a day, once a week, whatever it is. And you start identifying, here is what's going on. Here are the mistakes that we're making. Here are the errors in our processes. And here's the trending that's happening. In the Northeast, this seems to be happening. This type of complaint seems to be happening a lot more often than it used to. Let's go in and find out what happened. And so you end up finding things like, in one of our clients, there was a fee waiver problem. So the bank was not appropriately processing fee waivers. We've seen that in our previous places, right? And they were able to discover that this was an issue before those complaints got to the point where the regulators had to get involved.
Oh, wow.
Right? And so they were able to recognize it, and they were able to start resolving it and putting in place the right processes before those complaints built up to the point where the CFPB needed to be involved or somebody else from a regulatory perspective needed to get engaged.
Yeah, I mean, it sounds to me, so everybody talks about next best product in financial services. And what we can do now is what's the next best experience for the customer? So really removing all those friction points that create Reg E issues for banks. It's like, instead of thinking about, hey, I'm going to eliminate a Reg E issue, I'm actually just going to create a better experience, for more frictionless experience for my customer.
That's right.
That's, I think, where a lot of value is being missed.
I totally agree, because that's the main issue is you can use this information to identify where things are going wrong and resolve it from a regulatory perspective. That's where the banks are focused. Now, if you go have a conversation with a customer experience person at a bank and say, where's the budget to use generative AI to actually monitor these things and improve your customer experience? The budget's not there.
Right.
2 years ago, there was budget to do that. Today, it's all about efficiency and compliance. Those are the two big levers that people are focused on.
Okay, so they're focused on those levers. The customer experience person doesn't have the budget. The chief data officer might have some budget.
Right.
Getting them together with the chief risk officer can create a pretty valuable conversation for the three of them.
Yeah, and you look at what the chief risk officer does today, or the chief controls officer in the operations, right? When they are looking at mitigating regulatory issues, they're looking at sort of playing defense, right? Now, what if the chief risk officer could actually be empowered to say, you know what, I'm managing the risks, I'm managing in line with the regulations, but now I have a role to play in that customer experience, in the growth of the bank when, growth comes back as a major lever.
It's a major lever. Moving from defense to offense, right? So I think
exactly.
I was trying to figure that out, and I equate that with shifting from detective controls to preventive controls.
Yeah.
So largely, most of those controls in place at banks today are detective controls.
Yeah.
They're all, hey, after the fact, this went wrong, let's do the root cause analysis. Instead of saying, here's a potential for something to go wrong, let's make sure it goes right.
Right.
That kind of corrective action capability. Are you seeing anybody look at that or adopt that, or is that the next stage?
I think there's several banks that are looking at that, is looking at how do we take the regs, and there's processes in place to do all this, taking the regs, transforming them into what are the policies that need to be implemented,
right.
and then how do those policies get implemented in the operations, and then testing to make sure
continuous
that those policies are being followed in the operations, that's all in place, especially at the large banks. That's a pretty rigorous process, and sometimes a little too heavy. A little too heavy, because what ends up happening is you start building up control reports on top of control reports, and people are afraid to shut off the control reports from 10 years ago, because who knows what those are controlling that are preventing you from getting into trouble.
Shut off some reports.
Yes.
No one yelled. It was okay. No, it was okay. No one uses those reports.
No one uses those reports,
Right.
but they're afraid to shut them off, right?
Yeah.
So going forward, I think the next step that you'll be able to take is looking at those regulations, the same way that we saw Gen AI pass the LSAT,
Right.
looking at those regulations and saying, what are the real things that we have to mitigate against? And what are the real things where we have to ensure that the consumer is taken care of? And translate those into the processes of the organization, and then continuously monitor those processes using AI. So the idea is not that AI is going to replace humans. It's going to give humans scale.
Right.
So where I could, as an internal auditor, I can only look at 1% of the phone calls that are coming in, or 1% of the processes in any given month. I can now have the AI go out and look at 100%.
Right.
And flag the ones that look suspicious to me. And then I go in and I make the call on those.
Make the call. So there's still a human in the loop, so to speak.
Yeah.
It's
as an integral part
as
of
an
the
integral
system.
part of that. So but that person is much more of an analytical person versus a swivel chair person.
Yes. Exactly. Exactly.
I think most people would relish that opportunity.
Exactly. Because I liken it to you've seen the movie Despicable Me.
Yeah.
Right. So you've got Gru, who's the human in the loop.
Right.
And then he's got all his minions. So think of AI as the minions who will go out and do all the tasks. They're perfectly coordinated.
Yeah.
They're perfectly communicating with each other, ideally.
Well,
but they're exactly
maybe not
in the movie. But then they're giving that human exactly what they need. All the activities that the human used to do that they didn't have the capacity to do or they didn't want to do. Now AI does that work and enables that person to be the decision maker. So it's a much more interesting role for that individual, where they're spending 100% of their time doing things that are really impactful and meaningful.
Yeah.
And before, they were spending 1% of their time doing that.
Now, that's all predicated, I believe. I've gotten to a conversation with people about this. That's all predicated on super high quality data inputs. And there's a hypothesis out there that, well, it only really has to be about 80%, because the models will ignore the outliers, hopefully.
Yeah.
Well, how do we know what that is? It 80%? Is it 90%? How do we determine that as an organization?
Yeah.
What's our threshold? And is that really the secret to making this economically viable?
It's a great question. And people get bogged down in that question, right? And they get bogged down with, oh, is the AI going to hallucinate because it was fed incorrect information, right?
Yeah.
You can go and have generative AI. The whole process that generative AI uses is whatever you feed into it for it to learn is what the output is going to look like, right? Yeah. And it's a predictive versus a deterministic output.
Yeah.
So if you give it 60% incorrect data or 60% correct data,
right,
it's still making a predictive output. So whether the data is 60% correct or 80% correct or 90% correct, doesn't matter. It's making a predictive output. So that with a 90% correct data or 100% correct data, you could still get a 50% correct output,
right?
Because it's predictive, right?
Okay.
It's not deterministic. Yeah. So, which is very different from getting your year-end credit card report, which is a deterministic, you spent this, we added it up, here's your output, right?
Yeah.
That has to be 100% correct.
Yeah, my wife always wants to predict how much I'm going to spend. I have no idea.
That's right.
I said, it's bad data.
I'm a source of bad data. So I think the way that you have to think about data in the generative AI world is get to action as quickly as you can on your most valuable use cases.
Okay.
And start playing with those and always have that human integrated into the process where the human is looking at the outputs and making the final call.
Okay.
Right? I think that's the...
Yeah, and there's some factors, I guess, of iterative machine learning there too, right? So get to action as quickly as possible and then use some sort of machine learning ops to take the predictive model outputs and improve them based upon results. So even customer feedback is like, was this a good experience for you? Yes or no?
Yeah.
That's a simple feedback loop.
Yeah, we've got this thing. You've heard of RAG, right?
Oh, we actually are working with clients to say, hey, talk to your documents. So we build RAG models for them where they can just ask questions of their own documents.
Yep.
And it becomes very powerful.
So we're building something called TAG. So you have a set of RAG tag models soon. But the TAG is trust augmented generation.
Yeah.
So the idea is that you the first step is wrap your LLMs in a human.
Right.
Right. But then the second step is once you've got the ideas from the regulations of what's good, what's not good.
Right.
You've got your internal policies, what's good, what's not good. And then what's maybe not written down, which is your brand statement.
Yeah, those are important.
Right. Things that might affect your brand negatively. Yeah. What's good and what's not good.
Or it would impact your brand positively.
Yeah,
too,
exactly.
Right? Yeah.
Exactly.
Yeah.
And you take that set of guardrails and you wrap the LLM with that. Mm-hmm. So when you think about, you make an ask of the LLM and it outputs something. If it violates the not good rules, then you just ask it again. Yeah. And so that feedback loop that you're talking about, it actually happens in real time, right?
Yeah,
it has to be built into the architecture.
We CapTech have implemented things like that, where we're using one LLM with a set of rules that have the regulations, that have the PII rules and all the other stuff, but it also has your brand rules in there too.
Exactly.
So that when an output comes back from the RAG model, it actually has your brand built into the language that's suggested for an agent to use.
Exactly.
We did that as an experiment with one of our customers, and the call center agents who were using that loved it.
So you've already got the ragtag models working.
Ragtag models. I like that phrase though. I'm going to adopt that. We called it AI to govern AI.
Yeah.
But ragtag is pretty cool.
Yeah. But that trust model is going to grow and grow and grow, right? And you can imagine that as these OpenAI and Claude, these guys have billions of dollars of funding. So as those use cases get built, that's going to be an integral part of these large learning models.
Okay, so we'll let them spend the billions of dollars, and we'll just spend maybe $500 million to make it work.
Let's figure out how to make it work in the meantime, in the interim, right? With the human in the I hate saying human in the loop, but a human driving the process, right?
Human
Not just in the loop, you're actually owning and driving and leading the process. But eventually, the large learning models will subsume that trust layer, and they'll have to, right?
Yeah.
Because right now that's a big issue.
How do you know when that subsumation of the trust layer is kind of going off kilter?
I think you always have to have a set of controls around whatever an external party produces, right? Mm-hmm. Especially if it's a predictive output. Just like if you bought a core banking system, you want to make sure that it's calculating interest correctly. Yeah. Right. That kind of thing. But any acquisition of any of these types of things that you do, you'll have to make sure that there's an element of, I believe the outputs.
So it always goes back to me. It's like I only test in production. So there's a certain amount of production testing of synthetic experiences you want to generate that you make sure that they are still staying appropriate and creating trust with the fake customer.
And essentially, that's what a lot of financial services companies do today. They're testing in production. Mm-hmm. Once you get a series of complaints built up around this specific topic,
you want to make
then
sure
you go address it, right? Now, where that breaks down is where you've got the typical taxonomy
Right.
of complaints or risks or however the bank has chosen to categorize. What happens when you have a new product? So when Zelle came out, in the taxonomy, Zelle didn't exist.
Right.
Zelle came out as a new product, and there was not a set of regulations and there was not a set of risk
Right.
folks who were looking at that and building it into taxonomy. So you had massive number of Zelle complaints building up without anybody ever realizing
Right.
that this was a Zelle complaint, not a call center person said it's a payments complaint, or it's a balanced, a cash transfer complaint, or it's a customer's just unsatisfied complaint, whatever the drop downs were in the call center. And nobody realized that Zelle was the source of those complaints until the industry ended up running into it. So what can Gen AI do? Gen AI can say, here's the taxonomy that you have today. Here's how it maps up with the regs, right? Here's where you're missing things.
Yeah, here's what's not fitting into your taxonomy.
In the regs.
Yeah.
And then dynamically generate the third part of the taxonomy, which is, here are the things that you're not watching for, that the regs don't call for, but looks like you should be putting them into your taxonomy.
You can even take that, rather than having it discover those, is it possible to say, this is the design for Zelle. This is what we're trying to create. This is what we believe the customer experience will be and the customer capabilities will be. Can you design that taxonomy ahead of time, right? So let's take a look at that and what does it look like? Yeah.
That's typically the way you would. So if you introduce a new checking product, you build it into the taxonomy, right? Is that this is we're going to pay you X% interest on your checking account, and there's no fees for the first 18 months. If you start charging fees after 12 months because it wasn't properly entered into the system and the disclosures didn't match what's in the system, it's going to pop up as complaints. But you want to ideally design for that.
Design for that ahead of time.
Yeah. But then there are those things like the Zelle issue, which people didn't actually conceive was going to show up.
Was any different than what we did today. It's just a simple transfer.
Exactly.
But it was done. Completely different mechanism.
Exactly.
Cool.
So.
Okay, so let's talk about the nuclear bomb issue, right? So Kevin saw this comment, and we've been chatting about it. It's a nuclear bomb, or there's nuclear power capabilities, which you can debate whether they're good or not, but it's a physical phenomena, right? And if you liken artificial intelligence and generative AI to a new set of physics in the financial services world, we've talked about regulatory stuff. How is it that it can really make things possible that were not possible before in financial services? And I'm not talking about, banks can operate more efficiently, banks can be better. I'm talking about, how do the markets actually change? What's different for the customer, and how do we empower customers with financial services in a better way?
I think if you go back to the minion analogy, right?
Yeah.
A different way of asking that same question is, imagine that you were starting a bank today, or you were starting an insurance company today, and the number of minions, it's probably a bad word to use, but the number of assistants or the number of interns.
The amount of assistance you can get.
The number of interns you can get, the number of assistants you can get was infinite. How would you design your business differently? And let's go into a couple of specifics. So in insurance, for example, in group protection, right? The way group protection is sold is it's sold through brokers. Right. And brokers submit their packets, which are big, thick packets full of all kinds of information about their clients. That they're bringing in, right, to the insurance company. And you have a specific amount of time to respond with a quote or with questions.
Yeah. And you've got to take their data and transform it to fit your quoting system.
And so what happens?
We just help the customer with that issue.
So what happens? 50% of those packets go unopened.
Right.
Because you just don't have the capacity. What you do is you find the brokers who are giving you the best business, and you're pulling those from the stack and actually using those and quoting those.
And they're still taking 2 to 3 days.
And now, if you had lots of assistants, infinite number of assistants that were perfectly coordinated, what would you do? You would open all of them. You'd have the assistants review all of them,
Right.
enter them into your systems,
Yeah.
and look at the ones that are most likely to turn into business for you.
That's
and
interesting.
have your underwriters actually just work on those. So instead of now working only on 50% of the incoming requests, you're now working on 100% of the incoming requests. And now you're not going to double your revenue from doing that, but let's say even 20% of the ones you would never have even opened
Right.
are good and you could win those. Now you're talking about a massive amount of revenue growth.
You're also talking about a massive amount of risk reduction, because you can look at the portfolio of all that stuff, because this all stuff handled on an annual cycle. So as an insurer, you can look at, how do I create a portfolio for the next year of these insurance policies that matches the risk profile
Yep.
that I want to create.
Yep.
So I've had, hey, Tom Gaynor and Mike Markell talks about, you put money in the bucket and the bucket builds up. And sometimes you have to take a lot of money out of the bucket and the bucket's not as strong. So which position are you in? Are you filling the bucket up? Is it full? Can you go take a little more risk? Or do you need to actually start to pull out of the bucket so you want to take less risk in the future? So you have that annual cycle. And being able to make that decision based upon all of the quotes that you have requested could be really, really powerful.
Really powerful.
Yeah.
Yeah. You can set your appetite
Yeah.
in each of those buckets based on what you saw
Right.
in the last cycle.
Or based upon other data that you might have,
Yeah.
there's a lot of modeling that happens there.
But that's an example
Yeah.
in insurance where you literally could have a 20% lift
Yeah.
in revenue by just looking at
More
using AI
Yeah.
at a broader
Yeah.
set of the requests, right?
Yeah.
If you look at, for example, life insurance quoting, right?
Yeah.
For the most complex cases, you're getting big, thick medical packets.
Right.
Right. And
Yeah.
today what happens, you ship them offshore, somebody reviews them, summarizes them, gets them to your underwriter. What if you
There's
could
some
do
danger
that,
in that.
much faster? Yeah. You could do that much faster.
Yeah.
And you could turn around quotes much more easily. And what will happen is not that these are some pie in the sky use cases, because people are using these things today and they're starting to experiment with these big high value things.
Right.
If you are not doing that, and if you are not building your muscle to do that,
Right.
you'll be out of business.
Yeah.
Because that's to me is the power of this nuclear bomb, is because once a competitor does that, everybody else that's in that market that plays on that same
They're
field,
operating at a higher cost.
they're operating at a higher cost. They're not quoting 100% of their incoming leads. They're taking 3 months to underwrite a life insurance policy instead of 3 minutes,
Yeah.
right? What's going to happen to that company that's taking 3 months?
They're going to
Nobody's
lose
going
a
to
lot
get
of opportunities.
They're not going to get they're not going to get volume. So that's the way to think about this. It's an industry shift. It's not like PNC and Geico, Progressive and Geico in PNC being more advanced in analytics and therefore, being able to take business away from State Farm and Allstate. That's a different game, right? Because State Farm and Allstate was about distribution. And Geico was about, and Progressive was about pricing and digital.
Pricing and digital.
Right?
Yeah.
They're two different industries. But you take traditional life insurance company 1, traditional life insurance company 2.
Right.
They're in the same industry, right?
And they're selling an investment tool. They're selling an asset.
Yeah.
Yeah.
Exactly. They're not making most of the big meaningful life insurance companies are not making money on term policies, right? They're selling the big permanent, policies.
Term life.
And those are complicated, and the users are ultra high net worth and that type of thing. So
that's actually interesting, because it's almost like you can start in that market and refine how you do that work. And given that there's, it's a big policy and there's a little bit more wiggle room there. If you don't get it exactly right at first, you've got an opportunity there. Your costs are already pretty high. So if your margin goes up by 1 basis point, it's not a big deal. But if your margin goes down by 10 basis points, it's a huge deal.
It's a huge deal.
Right.
Yeah. And if you don't get to see the volume anymore, because the financial advisors and the agents out there, they realize that if they send you a packet to underwrite, it's going to take you 6 weeks.
Right.
And your competitor is going to do it in 6 days or 6 hours.
Minutes. Yeah.
It's going to be a very different landscape.
Yeah. We know time kills deals.
Yeah.
Right.
And then I would say the third area that we can think about, again, using the same model that you described, right, is in wealth management. So imagine that today the ratio of financial advisor to advisee is 1 to 100. If you're in the wirehouses, it's 1 to 200.
Okay.
Imagine if you could go from 1 to 100 to 1 to 1,000 and provide better service.
Right.
What would that mean for your wealth management business? And you see, some of the at-scale players do a really good job of, like Fidelity does a really good job of using digital tools to be able to enable that advisor to handle many more clients. But generally speaking, most of the wealth management firms don't do that very well, right?
Yeah.
And so the type of thing, there are two dimensions to it. The type of thing that when somebody's dealing directly with the consumer, I'm dealing with a high net worth or an ultra high net worth person, I'm usually talking to them about the products that I feel most comfortable with,
Right.
versus what's exactly right for them.
Yeah. Well,
And
because you have to understand the products.
And what's going to
Gives you
happen?
the ability to have more understanding.
Exactly. And what's going to happen is I'm going to get an AI supersuit, right? That's going to enable me to talk about the products that customer needs.
One of the things on my credit cards was a super suit.
Supersuit.
Yeah.
Exactly. So now you're talking about a whole range of products.
Yeah.
Now, also, let me translate that into how the financial advisors find out about financial products. Is you have wholesalers calling on them from all the different fund companies, insurance companies, all that. Those folks are also super uncomfortable talking. Like if you're a fixed income guy selling a series of funds, you're uncomfortable talking about alts.
Yeah.
What if when you go sit down with the financial advisor, you can now not just talk to them about your comfort zone, but if they have a question, you can actually engage with the LLM to come up with the right answer, right?
Yeah.
And talk about what's most relevant to them. Maybe they have a case that's going on right now where the person needs XYZ product for them to be able to close them as a client. Well, you can have that conversation right there rather than saying, let me schedule some time with my alt guys, let me do some research and we'll call you back. Right? You've lost the opportunity. Whereas somebody else who comes in with that assistant on their laptop, they're going to win that deal.
I think they would hope that for sure. Yeah.
So growth in new business is a massive area where that end salesperson being enabled with this capability is going to be a game changer.
It's almost, there's a relationship component to it which may get lost because of, so when the broker or the advisor says, my client needs this, right? The fixed income guy might actually ask more questions because he has a relationship with them to go deeper into that client relationship than just understanding the need. He can say, well, tell me why he needs it, et cetera, right?
Right.
So I think there's, your scenario makes sense from he brings broader information, but it might also allow him to have better questions where it's like, I call it reverse prompt engineering.
Right. Exactly.
Hey, wait a minute, ask this question. I don't have enough information to really give you what the ultimate product should be. Ask another question, right?
Exactly.
So it's kind of the reverse prompt engineering of interacting with your clients or an advisor if you're a wholesaler.
Yeah. And have you thought about, a financial advisor is talking to the wholesaler about, I have an ultra high net worth person who wants to set up 6 trusts for each of their 6 grandkids. Yeah. And they want to put this amount of capital in each of the trusts. And this is the type of, to pay for college, this and that. Well, have you thought about how to incorporate life insurance into that strategy? A fixed income guy or a equity gal would never even think about to ask about that question on that trust, right? Or an annuity or some product, because this is where, that cross-pollination of products doesn't exist. So the financial advisor is left to talk to 17 different wholesalers to try to figure out what's going on.
From flower to flower to flower.
Exactly. Yeah.
That's really helpful. And hopefully one day you and I will be in those positions, right? where we can say, are you have AI helping me out here in my product selection? That'd be great.
Exactly.
Yeah.
Absolutely.
Great. Again,
Excellent.
it was great talking to you. Let's keep the conversations going.
Awesome. Yeah. Great catching up.